Alrighty guys, welcome back to the channel. We're going to be doing a post-week recap of the P&L of the week, of the trades that I took, etc. Kind of going into a little deep dive into gold and what we were doing today. But we're going to be talking about how I made around $22,000, a little bit over $22,000 across my personal account as well as through prop firms on Top Step. So really good end to the month. I'm not gonna lie, a lot of patience, bro. Earlier on in the month was pretty good, but you had to have a lot of patience in this month, man, because of the volatility and the fundamentals. But as you can see here, this was the entry that we ended off with. Really crazy fucking top tick, as you can see. And then this was on the personal account, as you can see, and this was on the Top Step accounts. And then the day before that, we ended up having a little bit of a loss, and then another loss before that. Very small losses. And last week we had about like 13K on the day. We covered that, and yeah, we're not going to go into everything else, but I'm just going to basically be mainly covering the week trades, and especially this trade. But let's get into it. Okay, so essentially the week opened up right here like this. If you guys remember what I used to tell you guys and teach you guys in the last video, you would know that we did have a contract. We didn't have the contract rollover yet, but with this gap up, right? It's okay to just buy straight on the gap up if you have a proper order flow confirmation, right? After something like this happens right over here. Now, again, it didn't happen. I can remember vividly there was no order flow confirmations, but I did tell you guys that this is very fucking crazy. I'm not gonna lie, because we really have not had these many gaps up in a while. Like, I think in the last 4 weeks it was a gap up like every time, which is crazy. But essentially, as you can see, I'm gonna delete this little zone here for now. Okay, but I told you guys, usually when you have a fundamental, or not a fundamental, but a gap up, something like this on Monday, in most cases you're gonna have a fill of that gap. So if I were to just mark out that gap, just that empty space, you can see we end up filling that gap and then ending up, that was the low of the week so far, and we end up rallying, right? So understand, guys, that this does happen. It's just the context in which this happened was super weird, because we should have seen that happen if you remember me talking about it, either here or all the way down here, right? This guy. Now, the reason this looks fragmented is because, remember, we're on the new contract now. The liquidity shifts. The old February contract is expired now. You guys should know how futures works. And yeah, okay. But essentially, when we gapped up here, right? Didn't see any trades. Again, we're really not. Yo, what the fuck was that? That was weird. We just had some random ass. What is that? You guys see that? Weird. Okay. I'm just gonna hope that that's fine and we're good on that. Hopefully no one's hacking me, bro. What the fuck? Anyways, essentially what happened was we end up hitting 5,000 the week before that, right around here. You can see on the new contract, we end up catching these longs, right? Actually, I already discussed that. But even though this gap fill happened, you have to understand, like, there's a reason why prop firms are so tricky, right? Because you have to understand, like, the market, just because we have opening sessions, right, Asian Open, whatever, like, it doesn't mean anything, right? These opening values are important for, like, retests and for what's the word I'm looking for narrative, right, for taking TP, etc., as well as the highs and lows of the session. But if I were to just hide, right, if I were to actually, I can't hide, like, maybe I can hide all this like this, maybe lock all drawings. Okay, I can't hide it, right? But essentially, if I were to just like take these days out, right, if I were to like these not these days, but these indicators of where it shows the box around the high and the low and the open, right? Well, you would see that this looks like a normal market. If we didn't have these session indicators, guiding us, it would just look like a normal fluid market, and that's exactly what's happening, right? It's not that like there's anything different happening. So when price opens up here, right, it's just continuing the move from here, basically. So it doesn't need to necessarily like sweep out the low, like ICT says or whatever, or any of that bullshit. It just can just open up and continue, which is exactly what it did. So on prop firms, though, we can't take a trade here, right? Because it said market close. So you can see we filled this gap literally at market close, right, at 336, 436. So we can't even take the trade. But if you had essentially gotten in on this candle confirmation, right here, or maybe a doji right here, and you held into the next day, you would have been able to, swing it all the way up for about 20 RR, which is, I think, kind of cracked. Well, not 20 RR, that's like the max TP, but up to session close, like 8 RR, right? So, you could have just bought straight open, but obviously, I just didn't want to do that because, I just didn't like the price action, right? So I was waiting. But once we broke structure above here, I end up, essentially, I want to take a long off this trend line, right? Because there's really no reason for us to go past these lows because we've already established these lows in this overall trend, RSI's bounce. There's really no reason to go past these lows, right? Now, not to mention, if I were to anchor my VWAP at the start of the week, you can see right here, right? We have our VWAP as our narrative. It makes sense, right? You can see our VWAP reaction and whatnot, but essentially the trade that I wanted to take was a low off this. So we hit off VWAP again. I want to see us tap the low one more time into here because this is also relative to this range. If I were to mark out this range here like this, well, the POC is going to be somewhere, obviously in the middle, right? Either. Well, let me remark this. It's going to be either here, right? Well, regardless, the VAL, VAH, it's going to be, in this area, the density of this area. Right, this area is the highest probability area for longs, right? So that was my whole rationale. So we ended up taking that trade on January 27th, right under this low, because also remember, after this low gets taken out, we can also expect some type of order book interaction, right? So it was something like this, just covering this swing low right here, because again, we shouldn't go past this low and then end up rallying. And that was my whole rationale on that. But as you can see, it ended up failing. We lost that trade, and then I was done for the day because, all this was kind of weird, right? If I were to also mark out the session VWAP for this session right here, like so, you can see this was VWAP, and I know it's a bit messy right now, but you can see these were taps off this like 1.5 band right here. But the thing was I just really didn't think that it would have just retested this area, even though honestly, looking back at it now, honestly, it really was low-key the only area to take a trade off of. I guess I got caught up, right? But yeah, no, this is really the only area you could say to take a trade. But after I took that loss, I just wasn't comfortable because it was like 8 o'clock, 9 o'clock, I was like, okay, this is just kind of weird because I thought this was gonna be the main level. And then as you can see, we ended up just chopping whatever, and then we pumped up, and then we ended up having that crazy pump up, literally, goddamn, a 1% pump up, 1,000 points, holy fucking shit, which was like 2,000, which was just insane, 2%, right? So that's what happened there. Okay, now. We're gonna cover order flow, the volume profile, but later you can kind of see we have our our volume profile up, right? And then we have our what you call it. You can see right here we have the VWAP bands, right? Things like that nature. But continuing on, right? Again, once we close over here, I really did not see any buy levels, right? This is again just buy it open, right? You can see where it's being driven up. Maybe you could have bought off, retest off maybe something here, maybe off something here, right? Retest off that little area of demand, right? Same thing. It just keeps retesting the demand, retest, right? This is a retest of this demand, but I just didn't really see anything. And then I took So I remember the next trade I took. The next trade I took was off this 50 moving out WMA, right? So we're making we're making higher highs. I really didn't see us didn't see like any selling going on. No real selling in the order book, right? And then we're just having this like microstructure trend up, right? RSIs, if you guys know how the RSI works, we just kind of like chop and consolidate. So I took a trade right off here, right off here essentially. Stop loss right was here, and I was targeting for like a 1 to 3, really simple stuff. And then I took a loss on that as well. And again, I was out for the day. I didn't see anything else, and yeah, there was no more trades. Actually, I did have a trade. I think right here, right? Because this was the last area of demand off the swing leg. So if you mark out the swing leg, right? Like this, right? That's our swing leg. In relation to this overall like microstructure, we take our fib tool out from this swing low to this swing high. You can see this. And honestly, I probably should have taken it off these retrace levels, but I just really like that extreme area of demand. Something basically like we were gonna do over here, where we retrace that extreme level of demand and then go higher. And that was it, right? Then you can see we didn't hit it. We just pump up, right? And then just keep pumping up. Now, at this point, guys, you got to understand, everyone's trading gold right now, okay? I don't want you to fall for the hype because, again, I'm following a model. I'm following a methodology, a playbook, right? People are just randomly buying gold with no clue on what the fuck's going on. You can't do that, guys, okay? Because understand, the reason why gold is moving up is on euphoria and retail sentiment, but mainly when we're hitting these price levels, 5,200, 5,300, 5,400, the book is thin. So you guys you probably don't know what this means, but essentially when everyone's buying, right, no one's selling, right? No, basically, no one is selling at these levels. They're just holding. Okay, and when that happens, that means the book is thin. That means there's no limit orders. Okay, there's no sellers to absorb the buyers. And when that happens, okay, it's called an illiquid market. You have a very illiquid market. So you're basically getting these big volatile jumps because it's illiquid essentially. Now, if I were to show you what this looks like on the footprint chart, you would be like, holy shit, like this is kind of cracked. Let's see if we can pull it up here real quick. Let's see if we can get it right. Oh, is this kind of bugged out for me? Oh yeah, there we go. Okay. If I were to show you what this looks like on the footprint chart, you're gonna notice something interesting. And maybe I could just in general, like I can show you yeah, okay, great. I can show you exactly what it looks like. Okay. So it's basically you're gonna see stuff like this, right? If I show you the delta on this chart or on these prints, you're gonna see it's really thin. So this is what it means by a thin order book. You're having essentially no delta, no transacting volume essentially, because no one's trying to sell, which causes big price jumps. Market makers will essentially widen their spreads, and you're gonna have these crazy accelerations, right? Because there's no one selling. But obviously, once a level of a concurrent level of demand is not demand, but a concurrent level of profit taking is reached, like people just want to start market selling their positions, which they end up doing like around here, right, in these areas. Then that's gonna cause a downward move, right? But the book was really thin, which is why you're having these accelerated price jumps up. So when that happens, though, guys, you got to understand that like you can't trade this, right? Everybody trading this shit is gambling. Okay, I'm out. I'm out at this point in the market because I don't see my model. I don't see anything, right? Literally nothing. So I'm just patiently waiting. I'm not taking any trades because I know that this is probably going to happen. We're going to have some type of whipsaw of where we just end up correcting immediately because of all this stuff. Also, you can see my I guess you could say my 3K withdrawal was approved by my brokerage account, so that's pretty nice. They're really fast. They do that shit same day. But as you can see, we just dumped, and like basically what happened was I took one long. I had one more long at that original level right around here. So I was like, okay, you know what? I could take a stab at a long right here, but probably not the smartest idea with all the volume coming in. I was like, okay, fuck it, whatever. We took a loss. And then I took one more. I took one more loss trying to short right here. So I shorted right, I think at this point right here, like this. I shorted like this right off this level of demand right here, like this. Stop loss was like this, and I was targeting this low like this for a 1 to 4, and ended up stopping out one more time. And I was like, okay, I think I'll take one more trade off here because this was the 2-day moving VWAP because it was the only VWAP that made sense. And I went for a 1 to 1 actually on this one because market was closing, it was consolidating, and fuck it, whatever. I just went for a 1 to 1. I was down -1 RR. Okay, and that was really that. It was pretty simple stuff. Okay. Now, as we start coming up here, right, why did I take shorts? Why did I get in at that point exactly over there? Well, I have a special indicator. I can't really show it to you guys, but it essentially marks out the valuation of gold in relation to some other stuff. So essentially, this indicator was screaming that, hey, man, we've kind of shifted that inflection point to bearish sentiment, and we could definitely see that higher time frame retrace and then a move lower, and essentially something having a swing leg like this. It's again, I can't show it to you. It's down here, but yeah, man, it's good stuff. It really is good stuff. Okay, but essentially off this leg, you can see this is above the 50%, so this is a bit of a deep retrace. We end up closing around here, and honestly, it just played out perfectly, bro. Just selling out at open, basically at open, and then we essentially, we have this high right here. So I was like, okay, you know what? I'm gonna, as soon as this high comes, as soon as this high is made, we're gonna see hopefully a pump up, and then we'll enter in off some confirmation on a candle confirmation, which I did end up getting in right around here off that bearish candle right there, and then ended up having a stop loss just a couple ticks above this swing high right there, at that swing high, not that swing high, but that high, that internal candle, and then I end up just knowing, because my model and my indicator said that we're gonna make a new low, and then I end up going for that 1 to like 10.7, actually a little bit bigger of a stop. So it was like around here was TP. So around a 10.4 RR trade. Just absolutely fucking beautiful. Absolutely beautiful. Now, I didn't enter on this one specifically. The candle that I entered on specifically was actually right like here, around somewhere around here. And the reason was you can see on the 1 minute, right? As we start to, we're not making higher highs, but you can see we have an internal divergence going on. So if I'm looking at the, if I'm looking at the chart right now, we have these higher highs being made relative, not even higher highs, but like I just have a lot of experience on this. There's a lot of confluences clustering at this point, right? As well as with my playbook and my other indicators and stuff. You can see that we're making lower highs right here. Okay, So essentially, that was a confirmation that we are going to potentially dump now and have that bearish move, and you can kind of see it happens like right there, right? I marked it out. Okay. Um, Deep retrace, right? Divergence going on, right? Candle confirmation, as well as there's no order flow confirmations, right? But as well as my other indicators, so it was just kind of screaming to go down. Now, also, this was daily open, and yeah, it just made sense because people were selling off, and there's no selling going on here. There's no limit selling going on here in the book. This was all these highs. Like I said, we're gonna make another high most likely. Like I'm telling you right now, because there was no real selling going on. These highs that were made were because people were taking profit. They were closing their long positions out, big institutions, players, or whatever, and that's essentially what happened, right? So there's that. Now, looking into next week, right? You guys gotta understand like how the volume profile works. I'm gonna bring it back here a little bit. You guys gotta understand how the volume profile works, right? I taught you guys. I'm gonna be dropping a full order flow course on how volume profiles work, etc., and whatnot like that. Essentially, if you've been keeping my content or watching my content, keeping up with my content, you guys should know like high volume nodes, low volume nodes, POCs, VAH, VAL, like how all of this works, right? And essentially, we know that price will essentially gravitate towards areas of low volume to find new areas of rebalance, because this is on auction market theory of how the market works. So really, the only area of low volume I see is going to be down here. So if I was going to look for longs, if anything, I would look for longs maybe down here, right? Because we have that area of low volume. If we do make a composite of our profile, so this is really good as well. Composites are super important, guys, because what they do is that they essentially allow you to basically aggregate certain weeks into one net volume profile. So if I make a composite volume profile like this, you can see if I were to just delete this one more time, well, the only areas of low volume are really going to be down here and down here. Now, this area, right, of low volume, right, is most likely, sure, it could potentially have some reaction off here, but we're most likely going to draw past and go fill this gap and keep dumping past. So I really do think that, like, sure, maybe you could find some trade down here, but really this is the main area. Also, we do have a swing low right here. So potentially after we come down here, we hit this level. Also, you can kind of say, hey, this is a visual area of demand, right? Volume, it is a volume cliff, right? You can see the cliff of volume right here. This itself is the low volume node, right here. And then specifically, if we were to mark it down to the edge, right here is going to be our edge of where that and I'm going to zoom this a little bit more, that edge of where we have our our volume, right? So you can kind of say it's basically this level of demand, right? Which is kind of where I see longs. Now obviously, we got to wait and see what price does. I do think going to next week, going to February, I will be bearish. Now, we might have some short-term temporary bearishness to this level and then make one more high where we then react off this level of supply again. Maybe we make another high, and then we have, we want to make this the top, because I kind of have seen how higher time frame price action works. You do see this interaction of where like the monthly will then, for the next month, it'll come up again, retest this area, maybe slightly make another high, and then end up being a seasonal high. So I do think we are probably topped out though for the the year, honestly. For who knows, maybe a year, maybe 2 years, I don't know. But I can tell you though that like it's gonna be a temporary top, and we gotta really see what happens if price comes up here again. But this area should be retested one more time, in my opinion, before we make that top, right? We also could just dump. I mean, again, we just have to be patient. This is what I'm trying to say, right? If you look at the COT data, if you guys don't know what COT data is, it's called the commitment of traders. I have a special indicator that marks out certain retail sentiment and smart money sentiment. Smart money is bearish now. So we're seeing that disparity of essentially smart money being very bearish, being positioned bearish right now, and retail being positioned long. And if you guys don't know how COT data works, like 90% of the time, smart money is always right. Okay, so retail can be right sometimes, but smart money is right for the most part. So they're going to start unloading their positions, I think, and we should see some type of correction to retest 4,000, 5,000, etc. But just know that we are going to have some higher time frame bearishness. It's not a if and or but, it will happen. It's just we have to be waiting. We have to time it with the with the technicals, right? But as I said, and you've probably seen, like, people are just buying gold, bro. People are buying gold and silver randomly because it's just off euphoria, right? If you could have bought it any time during the last 7 days and made money, and people don't understand, like, you need to have a method of analysis and real-time understanding of these market structures and these market dynamics to really set yourself up for long-term profitability, right? Like, I'm not taking random trades, guys. I'm sitting out, I'm being patient, right? I'm waiting for the playbook, I'm waiting for the model, I'm waining for the setups to present itself, so I just can't take a trade. And I mean, you're seeing real success, real high-level trading in your face right? Real P&Ls, you know what I mean? So yeah, going to next week, we'll see what we do. Now, again, I don't know. Gold's or the price action right now is in an awkward spot. So I really don't know. We're kind of in this middle of this range. Maybe we retrace a little bit more, and then off the structure, have a deep retrace, end up going down more, and then hitting our level, then end up going higher. It's really hard to say. But also another reason why we took this trade was this was a Q level. So if I were to now, go and put up my indicator to here, you can see, well, we are having algorithmic tick reactions to our Q level, 54.75, and that is where we end up dumping. So that was like 5 confluences at that point. And yeah, I mean, I was trailed out, right? We always gotta, manage our risk. You can see right here, right? I was trailing my stop. So, it was normal. Like, I'm not like, even if we retrace, like, it would have sucked because I didn't want that 10 RR, you feel me? But, we always got to manage our risk and do positive EV interactions, right? Positive EV endeavors. But yeah, really good stuff, guys. Really good stuff. If you have any questions, please let me know. I really don't think there's anything else to cover. We end up hitting a great fucking week, boys. Great fucking week. But guys, make sure to join the Discord. If you want to apply for the mentorship, it's going to be in the profile. We'll work. I'm going to show you the ropes. We'll get you results like these. And yeah, but mainly join the Discord, guys. There's literally no reason not to. So yeah, I love y'all and take care. Stay tuned for the next video. And hey, I know I've been dropping hella banger content on YouTube, so just keep showing your boy support, bro. It really means a lot to me. We're trying to hit 10K subs this year. And yeah, I will see you guys later. Peace out.